India's campaign to boost Rupee's role in cross-border payments headed off with a slow start since there are challenges for countries to reduce their dependence on the dollar, experts have said. RBI has allowed over a dozen of banks to settle trades in rupees with 18 countries since last year. It has also been encouraging big oil exporters such as UAE and Saudi Arabia to accept Indian rupees for trade settlements. But success has been elusive so far. Hello and welcome, I'm Pallavi Sharma and you are watching MoneyWise with ET Now. In this video, we decode the challenges for Rupee to become a global currency. As per reports, India's local currency trade volumes are negligible at around 10 billion rupees, which is 120 million in dollar terms since the project started 1 year ago. This compares with India's total goods trade of $1.2 trillion in the last fiscal year. The move to make Rupee global is in line with Prime Minister Narendra Modi's aspiration for a bigger global heft for India, as it is one of the world's fastest growing economies and tries to position itself as the next best alternative to China in manufacturing. India is betting on internationalization of Rupee to reduce the dollar demand and make the country less vulnerable to the global currency shocks. However, some of its own policies counter these goals. The country still has capital controls and maintains a tight grip on Rupee. Other challenges include a chronic current account deficit and smaller share of global exports at 2% as per Bloomberg's report. Now, the issue has come into light even further when recently India is struggling to pay for a surge in cheap Russian oil imports in rupees. Moscow accounted for almost half of India's oil imports in May. Now, Russia is not willing to accept rupees due to the exchange rate volatility. It prefers the yuan or the UAE dirham. Russia has accumulated up to $1 billion each month in Rupee and does not know what to do with it. The Indian government has suggested foreign countries to invest in government bonds and bills to use the surplus rupees. But this too has challenges because India has been cautious in opening up its market. It has refused to give tax exemptions to trading on international bond platforms. It has also withdrawn the plan to issue sovereign bonds in overseas markets. Now, when we compare India with China, India is seen a counterweight in Indo-Pacific by the US-China's growing influence. Brazil and China have struck a deal to trade in their local currencies, and even France is starting to complete transactions in the yuan. China has a much bigger sway in global finance. The yuan had the fifth biggest share as a global currency in May at 2.5%, while the rupee is not even in top 20. In terms of forex reserves too, yuan has 7% share versus rupees 1.6%. However, the benefits of India are not to be sidelined. India mitigates currency risk for Indian businesses, reduces the need for maintaining large forex reserves, as well as making the country less vulnerable to external shocks. In an interview, former RBI Governor Usha Tharoor had said, and I quote, "India is not aspiring to make the rupee a reserve currency. India is trying to make rupee easier to be a currency of transaction and payments." So, well, it may be too early to write off India's attempts to make its currency global, as India is expected to be the biggest contributor to the global growth through 2028 as per IMF. Experts say that a more open capital account with a large liquid pool of investable assets could help the rupee to gain a share as a medium of exchange and a material reserve currency. For more such news and updates, follow ET Now.